And welcome. This is Mary Ellen McGonagle here with Erin Swenlin each and every Thursday afternoon with Chartwise Women. And we are all set today to share with you some items that are picking up, areas that are developing, coming into their own. So lots to cover. Erin, how are you doing today? How's it going?
I'm doing just fine, trying to keep warm. What happened to our lovely weather?
I know it. I had that fireplace going again last night and just trying to keep warm. I'm sure elsewhere in the country, my daughter's in Ohio and she was driving through the snow the other night. So I don't feel I have a whole lot to complain about. I think it was probably high 50s here. So
yes, I know our East Coast friends are probably laughing at us, calling 55, 60 degrees cold.
Right. Wimps maybe, right?
Yes.
But but always nice to get a little differentiation there in the weather. But yeah, let's go ahead and get started with our theme for today. And I think that gentleman on the tightrope probably is very indicative of how a lot of us are feeling about the precarious market environment, certainly over the last week or two. But today we are going to be sharing with you some areas that are considered riskier and they are coming back into play. Now, whether, of course, given market developments, they continue to do well remains to be seen, but they are definitely areas that are worth noting because the stocks in these groups do, when they get going, will tend to outperform. So riskier areas are back in vogue. So that's what we're going to be sharing with you today. And of course, as usual, we are going to begin by sharing with you our wisdom of the week. And I'll go ahead, mine is up there at the top. Move into what are called riskier areas. It does point to investor confidence in the markets. So in other words, the markets, we had the Dow, the S&P hitting a new high, and these two areas in particular, small cap and biotechs, have generally by and large been sitting out this rally, certainly since February and beyond. They are seemingly coming back into play. And again, usually when these groups get moving, it is telling you that investors have confidence because these stocks do tend to be more volatile.
Right. And mine is that rallies will strengthen when those small caps begin to participate. Usually what we're looking for is, broad participation, not just those large cap, not just those FANG stocks. We need to see that broad participation. And so generally when you start to see those small caps begin to participate, you know that you're going to have a rally that should stick around and at least, hold up for a little while. So that's what we're looking at least that's one of the potential areas I'm watching, which is the small caps.
You bet. Yeah. So I can, or Erin, if you want to pull up the small cap index.
All right, I've got that right.
Yeah, let's take a quick look because unfortunately, since we did have our meeting and decide on a theme for the day, the markets have decided to go their own way. But what we're covering today is still very relevant, whether it occurs today or next week. It is a development. So I'll let you.
Yes.
Yeah.
So this is the S&P 600 chart, and I have a couple of indicators that we can look at, but you can see that we are back above that 20-day EMA. The small caps are up just a little bit here, even though the rest of the market has completely started to collapse. So that's kind of a good sign there. But you can see those rising bottoms here on that OBV. And as far as the bottoms on price, we're seeing a decline in those price bottoms. And that's a positive divergence. So I think that's something to consider. We're also seeing that RSI move into positive territory. I'd like to see momentum shift a little bit more to the upside, but we are starting to see the S&P 600 performing a little bit better now than the S&P 500. You can see that right here with this move this week to the upside. So we're starting to see a little bit more action going on in small caps. And, we haven't hit an all-time high for that since March. So there's certainly room for improvement here with the S&P 600. Mm-hmm. And I would just point out a few other things here. This is my Swenlin trading oscillators as of yesterday on the S&P 600. And you can see that we have bottomed right now in oversold territory. So we are looking for some higher prices coming in here for the S&P 600. It is a little bit early, but certainly seeing a little bit of improvement there. And I have a look here at what's going on under the surface as far as participation. The small cap stocks, we still have above their 200-day EMA in that 90% range. You can see that we're seeing improvement now on stocks getting above their 50-day and now stocks getting above their 20-day as well. So usually I know you're very focused on stocks that price changes above that 50-day moving average, and seeing a little bit of improvement here, I think, is a good sign.
Yeah, it is definitely giving indications that participation is coming back. It had small caps had a very nice rally yesterday, and going into the open today, there was a continuation rally. So again, if not certainly today or over the next day or two, we are on the prowl for this area to come back into firmer footing and join what I like to call the party, or at least, yeah.
Yep. I mean, after a big, strong rally like that, we do expect to see a bit of a pullback. And you can see that it's sitting right on the support of the last week's, or I should say earlier this week, that low. So there's still some opportunity here for the small caps to turn around. And it does look like they are trying.
Very good. I'm going to go ahead and share the biotech. This is the other area that we talked about that had been not participating and is seemingly coming into its own. We're taking a look here at IBB. This is the biotechnology, the NASDAQ biotech. It's a little faster moving as such, but let's take a look at some of the developments taking place with this index, which I use as an indicator, something that I'm keeping an eye on. So we did have a very significant pullback here. This is that mid-February pullback where higher valuation stocks were getting hit. Frothiness was kind of being beaten out of the market, if you will. So what I'm sharing with you here is that this index on 3 separate occasions pulled back here and found support at this 200-day simple moving average. Now, we have had a couple of downtrend reversal attempts here. First one being in the end of March, and then a secondary. So here we are with this third downtrend reversal attempt. The thing that caught my eye is that it did break above this 50-day simple moving average, the Biotech ETF IBB. And that is what I was on the prowl for and waiting for. You can go back here historically and see other periods when it did decisively break back above and how constructive that was. We can also take a look at the volume characteristics that are good coming into as the group comes into its own. And the MACD, this is a moving average convergence divergence momentum indicator, just now poised to turn positive. We already have a positive RSI. So I would argue we are certainly on our way to reversing that downtrend. One other item I did want to point out is a weekly chart, very much to give you a sense of when this group gets moving, really how much upside could potentially be in play here. This is taking us back into 2020 and again at the end of the year as well. So we're keeping an eye on that, want to see, of course, that area. And then from here, what we're going to do as we move on, we're going to share with you some stocks within these small cap area as well as biotechs that are looking compelling, that are picking up. So also we'll start out by sharing some of the best ways that you can uncover top candidates. And Erin, I'm going to hand it back to you for small caps, and then I will go ahead and share best how to uncover candidates in biotechs.
All right, here we go. And actually, I have to say some of the small caps I see are coming in the biotech space. Of course, I'm running scans because, as everybody knows, scans are my thing.
Sure.
So I ran a scan and was looking for kind of these mid-range scooters. And then I was watching the biotech space, since you were talking a lot about that. And you can go in, and once you do your, you can go right here, we can change what kind of capitalization it does have. And so you can start looking at some of the small caps that are starting to perform. Lots of real estate, I've noticed a lot of those. And interesting restaurants and bars. We have this one coming in as well with Del Taco. So I just ran this scan. I was looking at market cap. I was looking for price above the 50-day EMA. I was looking for a buy signal on that PMO or a rising PMO. And you can see this one's already been in a quite a nice move to the upside. And it looks like we could see some more there. Let's see, another one I had in mind here, Repligen, and full disclosure, I do own Repligen. And I really like the setup here. We have that double bottom coming in off of this decline. And certainly we just got the resolution to the upside as we expect. And now we should look for a rally about the size of the pattern, which is right about 3 handles, as we say. So that would put us right around 240. So I think this one's looking pretty good as well. And you can see how it's been performing against the S&P. So I think there are definitely some opportunities out here to be had in that small cap space. But basically all I did was I took one of my scans, and at the bottom of it, I added market cap right here. So you can see that market cap is less than 100,000. So that's what I used as a way to get to some of those smaller cap stocks. And the way you can do that is simply by going in here under ticker properties and clicking market cap and then add. It'll add it as greater than 10,000, but you of course can change that to whatever you like.
Very good. That is awesome. We are going to take a very brief break, and from there I will share how to get in front of some of these biotechs. So we will be right back.
The goal of the Decision Point show is really to give everybody a good idea of what's going on in the market in general, but we also like to focus it down on some of the major areas of the market that you should know about. We look at dollar, we look at gold, we look at bonds, we look at oil, and then we bring it all together and give you a very quick, easy to look at, know exactly what's going on. But then we also have our bonus material, which is where you get a little bit more of that things that make you go,
Okay, we are back. We are going to go ahead from here and take a look at how you can get in front of biotechnology stocks that are ready to take off. I can see we have a genome pattern there behind us. That is a big part. CRISPR technology, lots going on with biotech stocks. One thing to keep in mind is that many biotechnology stocks do not have earnings in place, so they are a little bit harder to embrace, if you will. But I'm going to be sharing with you how you can get in front of some of these stocks that have been top performers and are potentially poised to take off. I'll also then get into some names. And some of the names I'm going to be sharing do in fact have earnings. So that's exciting. And then of course, from there, we will share ETFs, which is an even better way if they're not showing earnings. So here we are with the first page interface on StockCharts.com. And I know that you've seen us do this before, but it definitely bears repeating. We're going into the sector summary, and for biotechnology stocks, we are going to want to go into the healthcare sector. And then from here, take a look. Now, there are over 500 stocks that are in the biotechnology industry. And what we're seeing currently is the percent change on the daily. And I will tell you, if you look at biotechnology stocks any day of the week, you will see this type of action. A lot of these stocks, there is a volatility inherent in them. And we did talk about that the volatility that the fact that there may be a move into biotechs is constructive simply because they do tend to have these rather big swings one way or the other. So from here, I am going to go ahead and sort it by that StockCharts technical rating. And this is something that is very helpful, again, particularly with biotechnology. And let's go ahead and take a look at this first name, RUBS. RUBY, and this is a company. Let's just go ahead and do this. I'm going to pull up full quote because from here we can get a little more intel as far as market cap. So RUBY is Rubius Therapeutics. It's a $2.5 billion stock, and they do what is called red cell therapeutics. And I will say the earnings are not here, but there's a lot of other interesting dynamics that we can key in on with this particular stock. It is currently in the throes of forming what I call the right side of a base. Ideally, we want it to get back up at some point above that 38 level. But let's take a look at some of the other technical indicators that are making Ruby look really quite interesting. We can see the RSI, that's your relative strength momentum, heading upward as the stock potentially forms the right side of the base. But what really caught my eye was this other momentum indicator, your moving average convergence, divergence. What you're on the lookout for here is that black line crossing up through the red, and we're just at that juncture right now. You can go back, use history as your guide. We did have that crossover back here in the beginning of March, and you can see the significant advance beyond that. So technically, this stock looks very constructive. It is having a pretty big move today, so perhaps on a pullback, it could be a very interesting candidate, but again, bearing in mind the inherent volatility. So maybe enter slowly, if you will. Let's go ahead. I want to go back because rather than just give you the ticker symbols, we want to go back and again, take a look at this SCTR rating. And from here, go ahead and share with you some other stocks. So VCEL, it is a smaller name, a nice scooter rating. Let's go ahead and jump right in. Take a look at this. It has been in a very nice uptrend. This company does do cell therapy and regenerative medicine, and it has earnings. So the estimates for this year are 100% year-over-year earnings growth. And for next year, 292% earnings growth prospects. And that's inherent in these smaller companies. They will oftentimes post triple digit growth prospects. And that is what is going to give you this nice outperformance that we've seen here. I'm trying to, so you kind of know my little drawing skills there, but you can see that the stock, once it gets going, can have a significant move. We are poised to break out of a base right now. And so definitely keep that on your radar screen, and we can go back and take a look at a couple of other stocks here that are setting up. Novavax is a name that certainly is on the radar, but let's take a look at CDMO. They are in phase 3 trials for a cancer medication, and we can see it's Avid Bioservices that the stock is, again, that formation where it is forming the right side of a base, found support at this upward trending 50-day simple moving average. So lots of nice constructive action taking place here. The earnings are not quite there, but when you see these stocks that have had significant moves, that's going to give me more confidence that investors are not shy about this particular stock. Oftentimes, these gaps up that you see here in December, upon closer inspection, could very easily be earnings related. While they may be negative, they're coming in ahead of estimates. So there are dynamics at play here that could easily drive this stock higher. And then one last name, and we will get into the the ticker symbol is CLDX, but we'll take a look at some of these ETFs that you can utilize to help you participate in these areas. But this is Celldex, CLDX. They do create vaccines for cancer as well as for infections, and I pulled back very orderly to this 200-day, but we can see that the stock is reversing its downtrend on its way to a base breakout. Your moving average, your momentum indicator, just now tipping into the positive point here. The RSI is positive as well. And I like to see that the RSI can remain in overbought. That's when it gets up here above 70. It's telling me that once this stock gets going, it could in fact have a nice significant uptrend. So those are some of the better looking biotech stocks that are out there. From here, we are going to go ahead and share with you some ETFs. Erin, I think you're going to help us out here on the small cap side. And
yes.
Yeah.
All right. So here is actually, I'm going to start off. Whoop, there goes my screen. I'm going to start off with VB, and that's the Vanguard Small Cap ETF. And you can see that we're seeing improvement here with that new PMO buy signal, my momentum indicator. The RSI is positive. We're waiting for a breakout here, but this is one that you could consider as an ETF to take advantage of small caps. But I also noticed that there's a growth one, small cap growth. And I really like the setup of this one even better because we do have that bottom on the momentum above this red signal line. That's usually an especially bullish signal. We have a positive RSI, and then notice the flat top and rising bottoms. That is an ascending triangle. That is a bullish formation. So really it looks like they're ready to break out here. The other ETFs I wanted to bring to your attention will take advantage of an area that's just really looking good right now, and that is gold miners. But I decided to look specifically at the junior gold miners, which are even, the smaller caps, small and mid caps. And you can see we're getting a pullback today, but that is absolutely excellent, to be honest, because we've had such a move to the upside here in gold miners in general. But junior gold miners being in that small mid cap area, they're really starting to improve here. And then the other one, that was SGDJ. The other one is JGLD, junior gold. And this one's a very small cap ETF. So actually, when I'm looking at this, this may not be your best choice, but it still gives you that same idea. We have that double bottom, we have the breakout, and a continuation to the upside. So probably want to stick with SGDJ, but I really am liking what's going on with gold miners. You can also do that quick little look here for gold miners by just going into the sector summary to materials where they are located, and gold mining right here. So there are plenty of stocks that you can look at here. If we go by scooter and capitalization, some of the names that are looking good, if I recall, Hecla Mining is looking good. We can see that we're starting to get momentum going to the upside. We have a symmetrical triangle here, so I would be looking for an upside breakout. And let's see, what other ones did I have in mind from the small to mid cap area? Majestic Silver has looked pretty good, but honestly, the one I've been watching would be Newmont Mining and Alamo Gold.
Larger,
but good too. Look at that, nice reverse head and shoulders, breakout, continuing higher. Lots of good things going on in the gold miners. So that's an area I would consider.
Very good. Mining for gold. Okay, so
yes, of course.
I know, as always.
Or diamond mining, like I do in my diamonds report.
Absolutely, always on the prowl. That's our motto. Sure. So let's go ahead. I'm going to share with you some very constructive looking ETFs in the biotech space. We can start here with IDNA. This is iShares Genomics Immunology and Healthcare ETF. So take a look. We can see it had a big significant move similar to biotechs overall into February, found support at this upward trending 200-day. And then today we are seeing that break back above that 50-day simple moving average. Your MACD just poised to turn positive. So this does look actually quite constructive. We're going to see if we get the volume that's going to give us confirmation that this ETF could in fact have legs as far as reversing its downtrend. Let's take a look at another biotech ETF, and that is, it's BBH. It's the Van Eck ETF. And again, I did mention this concept that biotech stocks, a lot of them, they are still in the discovery phase. They don't have earnings quite yet. So this is a wonderful way to participate in the move without having you do due diligence. These ETFs are a great way. One last one here. that we can look at. And this is one that was on my MEM Edge report back here. It was a big winner for us, ARK Genomic, ARKG, and we can see it, but it definitely has more work to do before reversing this downtrend. I will want to see it break back up above this 50. Your momentum indicators are not quite there yet, but put this one on your radar, because once it does come into favor, the underlying stocks start to take off, you will see potentially a very significant move. So we are going to go ahead into our final segment here. And it's when we talk about unusual headlines from across the globe. Yeah, that happened. And then from there, share with you some stocks. And Eric, our producer, came up with this unusual headline, and it is about a mystery animal sighting in Krakow that actually ended up being a croissant. And there was a woman in Krakow who very alarmingly phoned for help. She said there was an animal that had been residing in a tree across the street from her home, and she was just frightened. It was not leaving. Well, there was a reason. It wasn't going anywhere. It was because it was a croissant.
How did it end up in a tree, though?
Oh my gosh. Yeah, it may have been raining croissants. We don't know. But the point here is that the killer croissant was confiscated and all is well. So from here, let's go ahead. I'm going to share with you a couple of food related stocks, and we can chew on these. I just couldn't help it. First up, we are taking a look at Flowers, FLO. It is a food company. And what I'm going to do is go ahead and pull up the full quote here, because in line with our theme, this is a smaller cap name. It's a $5.2 billion stock, and we can see that it had a run up, pulled back, and it is now close to breaking out of a very long base. And the reason I point that out is statistically, the longer your base breakout is, the longer your advance out of that base. So we're going to keep an eye on this. It's also a nice 3.3% yielder. Erin, I'm going to pull up another name here and let you give your thoughts. And it is Twinkie Hostess.
Do you remember when everybody was really worried that Twinkies were going away?
Oh, yes.
How could that ever happen? Never happened. Yeah, I like this. A nice trading range. It does look like it wants to break out of it. It came very close yesterday. It's pulling back slightly, probably because you see that momentum moving upward. It is pausing and digesting that move. And I would expect to see a breakout to the upside here, given that positive RSI.
It does look very constructive in here. One last name that we can take a quick look at, and it is a food snack company. What do you think? Very similar, right?
Yes, absolutely.
Turning positive.
In this case, we did get that short-term breakout from, looks like another ascending triangle with a flat top and rising bottom. So very nice. You can see that momentum is starting to shift upward, and RSI is certainly very positive.
Yes. And then again, just very quickly on this. Oh, we do have that full quote up, but a lot of these we're sharing with you are consumer, oh my goodness, staples, and they do have yields. This is a nice 1.4% yielder. So yeah, and we are going to leave it at that. Everyone have a wonderful weekend, and we will look forward to seeing you next Thursday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.